let's start. See, what is adjustment of partners' capital basically? So it is possible this adjustment that I'm going to explain here is applicable for retirement as well as for a death of a partner, right? Sadhna, don't turn off your mic, don't turn off your video as well, right? See, at the time of retirement or a death of a partner, the remaining partners may decide to adjust their capital contributions in their profit sharing ratio, right? In such a situation, the sum of the balances in the capitals of continuing partners may be treated as total capital of the new firm, unless specified otherwise. So what does it mean? So it means, suppose there are three partners A, B and C, and if C is going out of the partnership of business, and if A and B are only partners in the business, then whatever capital is there after retirement of a partner C, whatever capital is there of partner A and partner B together, it is known as total capital of the firm. If nothing is mentioned in the question regarding total capital of the firm, what I will be assuming, Sadhna? I will be assuming a total capital of A and B together is nothing but the capital of the firm, if nothing is provided in the question regarding capital of the firm, right? And if it is provided that partner A and B needs to contribute something into the business, right? Accordingly, I will pass the general entry and I will give the effect, right? See, then to ascertain the new capital of the continuing partners, the total capital of the firm is divided among the remaining partners as per the new profit sharing ratio, and the excess or deficiency of capital in the individual capital account may be worked out. So for example, if they ask you, okay fine, after retirement of a partnership, whatever capital of A and B is nothing but the total capital of the firm, but after retirement of a partner C, if there is a change in profit sharing ratio, then what you have to do, whatever total capital is there, you have to distribute between A and B as per what? As per their new profit sharing ratio. And after distributing that, if any balances come in individual capital column of A and B, so that can be a deficiency of capital or that can be excess of capital. And you have to transfer that towards bank account, right? Such an excess or a shortage shall be adjusted by withdrawal of contribution in cash, as the case may be. Withdrawal or contribution, you can withdraw. If excess is there, you can withdraw. Either of the partner can withdraw if he's contributed more, and if there is a shortage, you have to contribute into the firm, right? So what will be the increase? So if it is excess, then partner is going to withdraw. For excess capital withdrawn by the partner, so entry will be partner's capital account debit to cash or bank account. So we know this, right? So amount will go out of the business, so bank account we have to credit, and capital balance we have to decrease, so we have to debit capital account, because capital is a liability. Whenever liability increases, we have to credit it, and whenever liability decreases, we have to debit it. Okay. So if capital is short, then partner needs to contribute money into the business, right? So in that case, money will come into the business, cash and bank account debit. So bank balance, cash balance will get increased. Similarly, capital partner's capital account we have to credit, right? See, one example will then get more clarity about this. See, when the capital of the new firm decided by the partner is specified, what they are saying, when capital of the new firm as decided by the partner is specified, means what will be the capital of the new firm. So after retirement of, there are three partners A, B and C. After retirement of a C, what will be the capital of new firm, that is A and B? Only A and B will be the partner in the firm now. So what will be the capital of the new firm is decided by the partner and is given in the question. See, Rohit, Kale and Lokesh are partners in the firm, sharing the profits in the ratio of 2:1:1. Kale retires and Rohit and Lokesh decided to decided that the capital of the new firm will be fixed at rupees 1,20,000. So here capital, they have decided already that capital will be 1,20,000 rupees for the entire firm, right? So Rohit, Kale and Lokesh were the partners. Who is retiring? So Kale is retiring from the firm. So after retirement of a Kale, capital of the firm will be 1,20,000 rupees. Okay. The capital account of Rohit and Lokesh show a credit balance of 82,000 and 41,000 respectively after making all adjustments. So what does it mean? After making all adjustment means what? So it is simply meaning it is like that. I am drawing capital account for you. How you are going to solve in practical if this adjustment is there in 6-mark question? How you are going to solve? See, I have prepared capital account. Rohit, Kale and Lokesh. Rohit, Kale and Lokesh, right? Kale is retiring from the firm. Okay, sir. Kale is retiring from the firm. That is correct. Sir, I know in capital account there are a number of adjustment will be there. So revaluation profit will come there. Partners capital balance I need to write down here. No, opening balance, buy balance, brought down, right? Then I need to write down if profit and loss account is there, right? Reserves are there. Whatever adjustments are there, you have done. Every adjustment you have done. Now you are here to close down capital account, and you have to find out what? You have to find out closing capital here. You have to close down capital account and you have to find out true balance carried down here. Mainly for Rohit and Lokesh. We got Kale is retired. So whatever balance is there that we have to pay. That is not our, I can say that is not a big deal, right? I can find out the balance, and if it is given in the question we have to pay, I will pay. If it is given in the question we are considering as a loan, then I will be transferring that towards retiring partner's loan account, right? But what is important, so how to calculate this Rohit and Lokesh capital, right? That is the case. So what they are saying here in adjustment, see now, read that adjustment once again. So I know total capital, that is nothing but Rohit and Lokesh together is 1,20,000, I know. But so what is of Rohit, how much of the Rohit and how much of the Lokesh, that I don't know, that I need to find out now. So how to find out that? The capital account of Rohit and Lokesh showed a credit balance of 82,000 and 41,000 respectively after making all the adjustments. What does it mean? After making all adjustment means what? Sir, after making all adjustment means after putting everything in the capital account, if you calculate, if you go for closing this capital account now, sir, you will be doing like this. You will be calculating total of credit side of Rohit and credit side of Lokesh. From that you will be going to subtract Rohit and Lokesh debit side as well. So after doing that, you are getting balances, right? That is, those are not final balances, right? But you are getting balances, and that is known as credit balance. And how much it is? So it is given in the question 82,000 and 41,000. Means after adding credit side, and from that after subtracting debit side total, you are getting 82,000 and 41,000 rupees here. So that is, once again I am saying, that is not your final balance, right? Here just you have calculated, right? Just you have calculated. So how much is the balance? So you are getting balance 82,000 and 41,000 respectively after making all the adjustments. Calculate actual cash to be paid off or to be brought in by the continuing partners and pass necessary journal entries, right? So what we have to do here, so we have to tell them answer which partner needs to contribute into the partnership from business and which partner is going to withdraw money from the partnership from business. So how can I give that answer? So giving that answer is very much easy for me, because sir, I am preparing here two columns, Rohit and Lokesh. So closing capital of Rohit and Lokesh I already know. 1,20,000 will be the capital of the firm, and that I am going to distribute as per their new profit sharing ratio. So what is new profit sharing ratio? So if new profit sharing ratio is not differently given in the question, then their old ratio becomes their new profit sharing ratio. We know that now. So what I will be going to do, 1,20,000 rupees, I will be distributing in the ratio of 2:1, right? So what will be the answer? 80,000 and 40,000. Am I correct? 80,000 and 40,000. So this capital I need to record as a closing capital 100%, sir. So what I will be going to do here, I will be recording that final answer that I have calculated, 80,000 and 40,000 here, right? 80,000 and 40,000 here. Sir, after recording this 80 and 40,000, will my account will get tally, sir? Capital account will get closed automatically, sir? No, sir. Why? Because, sir, actual balance is 82,000 here, right? Means credit side total is more, no? Credit side total is more, and you are getting actual balance 82,000 here. And here you are getting 41,000 rupees. So what do you have to do, sir? Sir, in order to convert this 80 into 82 and to convert this 40 into 41, yes, absolutely right. I need to write down that balance 2,000 rupees and 1,000 rupees as money brought in, or we have to pay. Tell me, Rohit and Lokesh is brought money into the business, or I am paying money to them? Yes, I will be writing here. Yes, absolutely right. To bank account. Why? Because I am saying I need to have a capital of rupees 80,000 from Rohit and 40,000 from Lokesh. But they have given me excess, no? 82,000 and 41,000. It means I need to repay them 1,000 and 2,000 respectively. Understood? So I will repay them 1,000 and 2,000 respectively. Yes. So cash paid off. See, 2,000 and 1,000 respectively we have paid. Right? They can see this kind of adjustment. They will ask you specifically for 3 marks, right? Or they can give you this adjustment in 6 mark question, right? If they asking for 3 marks, then they will provide you the case study like this, and you have to just calculate roughly, and you have to give the answer, right? You have to show your answer as well. No? You have to you can draw like this table. 80,000, 40,000 is the actual balance, which is it is the 1,20,000 is a closing capital, actual closing capital that you have divided into 2:1 ratio. Then existing capital after adjustment is 82,000 and 41,000. It means you have to repay 2,000 and 1,000 respectively to Rohit and Lokesh. So what will be the entry? The entry will be Rohit's capital account debit, Lokesh capital account debit to cash account, 2,000, 1,000, 3,000. Understood? Yes, Shivarish? Sadhana, understood? Am I audible? Shivarish, Sadhana? Okay, good. Now, the second scenario is there. Second is when total capital of the new firm is not specified, sir. Means what will be the total capital of the new firm is not given to you in the question. In the previous case, it was given. See, Aarti, Komal, and Somya are partners in the firm, sharing the profits and losses in the ratio of 3:2:1. Komal retires. So Komal is retiring from the firm. After making all the adjustments leading to the revaluation, goodwill, and accumulated profit account, the capital account of Aarti and Somya showed a credit balance of 1,60,000 and 80,000. Okay. So after adjustment, how much is the balance of Aarti and Somya? So after adjusting everything, their credit balance is 1,60,000 rupees and 80,000 rupees respectively. Okay, sir. It was decided to adjust the capital of Aarti and Somya in their new profit sharing ratio. You are required to calculate new capitals of the partners and record necessary journal entries for bringing in or withdrawal of the necessary amount involved. So now how to solve this? Sir, if new capital is not given, then what I need to do? See, it is simple now. What I need to do, simply I need to add this capital, right? Aarti's and Somya's existing capital after adjustment, right? After doing adjustment is what? Means what? So after doing adjustment is simple meaning is that only. So you have total credit side, right? from that credit side total, you have subtracted debit side total and you are getting amount here, right? So this is known as credit balance, 1,60,000 and 80,000. You have to find out these balances from totaling credit side and from that subtracting debit side. You are getting how much? 1,60,000 and 80. So what you have to do now? So simply we have to add 160 plus 80. Tell me 160 plus 80 how much? 2,40,000. That is total capital of the firm now. So total capital of the firm is 2,40,000 rupees, right? Now what we have to do, sir, this 2,40,000 rupees we have to distribute between Aarti and Soumya as per their new profit sharing ratio. And what is their new profit sharing ratio, sir? Right? So Aarti, Komal and Soumya, right? Who is the retiring partner here? Komal is the retiring partner. So if new profit sharing ratio is not specifically given, we can say Aarti's and Soumya's older profit sharing ratio becomes their new profit sharing ratio, that is 3:1. So what I need to do, this 2,40,000 rupees, I need to distribute in the ratio of 3:1 between Aarti and Soumya. Yes, what will be the answer? 2,40,000 multiplied by 3 divided by 4. 18,000 or 18,000. And yes, 1,80,000 and 60,000 will be the answer. Right, Shivarish? 1,80,000 and 60,000 only, not 1,60,000. 1,80,000 and 60,000 will be the final capital balances. The final capital balance is 1,80,000 and 60,000. Sir, previous balance were how much? So previous balance were 160. Now you are saying balance has to be a 1,80,000. It means partner A, that is Aarti, needs to bring how much? She needs to bring 20,000 rupees into the business, right? Aarti needs to brought in 20,000 rupees into the business, right? Now you are saying so 60,000 is the capital of, will be the capital of Soumya. So at present, how much her capital is? 80,000. It means you have to pay to Soumya 20,000 rupees. Yes or no? So what will be the adjustment entry? If I pass adjustment entry, only one entry if I pass, then what will be the entry? So simple, I need to debit what? I need to debit Aarti's capital account, right? I need to debit Aarti's capital account and I need to credit what? I need to credit Soumya's capital account. Automatically I can adjust, or I can pass separate journal entries also. So for Aarti bringing money, cash or bank account debit to Aarti's capital, and we are paying to Soumya. Soumya's capital account debit cash or bank account. See, cash and bank account will get cancelled, and final answer was nothing but Soumya have written wrongly here. Sorry. 20,000 rupees brought in by Aarti. So cash bank account debit to Aarti, right? And we have to pay to Soumya. So Soumya's account debit to cash and bank account. So finally, what we have to do? We have to credit Aarti and we have to debit. Am I correct? Debit Soumya. Understood? Yes, Shivarish. Aarti will bring money into the business. So entry will be cash and bank account debit to Aarti's capital, and I need to pay to Soumya. So Soumya's capital account debit to cash and bank account. So if I cut down this cash and bank, so Aarti capital account we have to credit, and Soumya's capital account we have to debit. Right, and that will be my final answer. Now, see the next one. When the amount payable to the retiring partner will be contributed by continuing partners in a such a way that their capitals are adjusted proportionate to their new profit sharing ratio. So this adjustment we have done in previous class when we solved CA foundation question. In CA foundation question, this adjustment was there, right? If you remember. What they are saying, when the amount payable to the retiring partner will be contributed by the continuing partners in a such a way that their capitals are adjusted proportionate to their new profit sharing ratio. So their capital has to be in proportion to their new profit sharing ratio, and they have to contribute also for payment to the retiring partner. Okay, so Mukesh, Mohan and Nitin are a partner sharing the profits and losses in the ratio of 4:3:3. After all adjustments on Mukesh retirement, so is retiring. Mukesh is retiring. Okay. With respect to general reserve, goodwill, revaluation, so every adjustment is done. The balance in the capital account stood 70,000, 60,000 and 50,000 respectively. Okay, sir. Mukesh, Mohan and Nitin are three partners. So today, Mukesh is retiring from the partnership from business, and on the occasion of retirement of Mukesh, sir, we have done all the adjustments, right? We have done all the adjustment. We have prepared revaluation account. We have given effect for the goodwill, everything. We have done everything, and after doing that, so balance is how much? So balance stood how much? 70,000 rupees for Mukesh, 60,000 rupees for Mohan, and 50,000 rupees for Nitin. Okay. It was decided that the amount payable to Mukesh will be brought by Mohan and Nitin in such a way as to make their capitals proportionate to their profit sharing ratio. Calculate the amount to be brought by Mohan and Nitin and record necessary journal entries for the same. Also record necessary journal entry for payment to the Mukesh. Right? So at present, so what is their profit sharing ratio? So at present, their profit sharing ratio is 4:3:3. So how much we are supposed to pay now to Mukesh? So we supposed to pay 70,000 rupees to Mukesh now, right? And what they are saying for making payment to Mukesh, Mohan and Nitin is going to contribute money, and they need to contribute money in such a way that after making payment to Mukesh, their closing capital must be in proportion to their new profit sharing ratio. So in the question, their new profit sharing ratio is not differently given. So I can say their older profit sharing ratio between themselves is their new profit is 3:3, that is 1:1. Right? Now, how can I solve this, sir? See. What I need to do, the step number one is simple. I need to calculate total adjusted capital of all the partners, all the three partners together, right? So 60,000, 50,000 and 70,000. There is nothing but I am adding the capital which are given, balances which are given to me, 70, 60 and 50. 70, 60, 50. So after adding that, I am getting total 1,80,000 rupees. Okay, sir. After finding this, what I need to do? So 1,80,000 I will be 1,80,000 rupees I will be. This is nothing but total capital of the firm now, right? So I have added all the capital of three partners, right? So total capital of the firm is 1,80,000, and that I need to distribute between two partners. Those are continuing partners, right? In their profit sharing ratio, and their profit sharing ratio is 1:1. So it will be 90,000 rupees and 90,000 rupees. Now tell me if the capital is 90,000 and 90,000. I'm writing here. So this was adjusted capital, and final capital is 90,000 and 90,000, right? Sir, I have satisfied their condition that their capital must be proportion to their new profit sharing ratio. Yes, sir. It is proportion to their new profit sharing ratio, right? See, it is given. they should bring such an amount into the business. See, it was decided that the amount payable to Mukesh will be brought by Mohan in such a way that as to make their capital proportionate to their profit sharing ratio. Yes, sir, I have done it proportionately as per the profit sharing ratio. So what will be the balance? So if I see here, balance is 30,000 rupees, sir. If I see here, balance is how much? 40,000 rupees, sir. Right? So Mohan needs to contribute 30,000 rupees into the business. Nitin needs to contribute 40,000 rupees into the business. So 40 plus 30, it comes to 70,000 rupees. And this 70,000 rupees I can pay to Mukesh, right? So Mukesh payment is done. And after making this payment and after contributing this 30 and 40 into the business, sir, their closing capital will be 90,000 and 90,000 respectively, which is as per the new profit sharing ratio, right? So what I did, one second, what I did, sir, I simply calculated, I simply added what is their adjusted capital, right? So 70,000 plus 60,000 plus 50,000. So after adding this, I get to know answer 1,80,000 rupees. So I know this 1,80,000 is the capital of the firm, and there are only two partners now. So 1:1, I need to distribute as per the new profit sharing ratio. That is 1:1. So answer is 90,000, 90,000. So this 90,000, 90,000 will be their closing capital, and whatever difference is there, that is nothing but amount brought in by them into the business. So I need to write it down like bank account, cash or a bank account. So Mohan needs to contribute 30,000 rupees into the business. Nitin needs to contribute 40,000 rupees into the business, right? And then only we can make the payment to Mukesh 70,000 rupees, right? So what will be the journal entry? You can pass journal entry separately also or combine also. I am passing separate journal entry. So if Mukesh is contributing 30,000, my entry will be cash or bank account debit to Mukesh capital. If Nitin is contributing 40,000, so cash and bank account debit to Nitin's capital. And I paid 70,000 rupees to Mukesh. So Mukesh capital account debit to cash and bank account 20,000 rupees, right? Right, Sadhna, Shivarish. Any question, any doubt in this particular question, in this concept? Have you understood or not? Sadhna, yes, Shivarish, understood or not? Okay. So which concept we studied here? Adjustment of partner's capital. What was the first case? Tell me, Sadhna, what was the first case? First case was simple, no? Total capital of new firm is given, right? That was the first case. So directly capital is given to you. You have to just simply distribute the same between the partners as per their new profit sharing ratio. That was the first case. So second, total capital of the new firm is not given, right? If the total capital of the new firm is not given, then what we have to do? See, second one, if the total capital of the new firm is not given, what we have to do? So we have to add their adjusted capital and we have to distribute the same as per their new profit sharing ratio. Simple. See, in my example, 160 and 80. we added that, it comes to 2,40,000, and then we distribute the same into their new profit sharing ratio, right? Yes. So if total capital of the new firm is not given, we have to add adjusted capital of continuing partners, and that addition of adjusted capital of continuing partners is become the total capital of the firm, right? It is nothing but total capital of the firm. And and step number B, so we have to divide total capital as per new profit sharing ratio. Simple. Then, so we understood case number 3. What was the case number 3? So in case number 3, total capital of new firm not given, sir. Then, so amount payable to retiring partner must be brought in by continuing partners, right? That is a case, that is a condition. And how to brought in? So you have to brought in such a way that new capital of continuing partner must be in proportionate to their new profit sharing ratio. So this is the case that I've written. How to solve this case? Solving case is simple. The first step is to we have to add addition of total adjusted capital of all partners, right? So all partners adjusted capital is there, we have to add that. So after adding that adjusted capital, what is the next step? Sir, distribute that total capital that you calculated in step number A between continuing partners, right? We have to distribute in continuing partners. Between continuing partners as per their new profit sharing ratio. As per new profit sharing ratio. So after distributing these, step number 3, you will get balance. You will find balance in, or you can say difference. You will get balance or difference in A point and B point. This A point and B point, you will get difference, and so that difference is nothing but your amount brought in by the partners. And this difference is nothing but amount brought in by continuing partners, right? Understood? As when you in theoretical way, if you remember practical questions neatly, then no worries. Yes, Sadhna, Shivari, any doubt, any questions? Okay, if you don't have questions, doubt, you can take a 5 minutes of break. So I will be giving you questions for solving on adjustment of capital. You can take a 5 minutes of break. So I will search and put a question for solving adjustment of capitals, right? Yes, Sadhna, Shivari, are you there? Okay, so I have posted one question. Read this question, solve this, and let me know the answer, right? Once you finish this, let me know the answer. Done, Sadhna, Shivari. Okay. No, Shivari, no, Sadhna, no. You're still doing, or there is confusion? Confusion is there. So shall I solve? Yes, Shivari, shall I solve? First of all, tell me, it is which case? Case number 1, 2, or 3? You can unmute yourself. Which case it is? Case number 1, case number 2, or case number 3? Yes, Shivari Sadhana.
Sir, 2 more minutes.
Yes, sure. Let me know once you finish, Shivarish. And by that time, Sadhana, tell me which case it is. Case number 1, 2, or 3? Absolutely correct. Let me know once you're done, Shivarish. Then I will start solving. Yes, Shivarish, shall I explain? Okay, what is the first step? First step, okay, we have to calculate total adjusted capital before retirement of a partner, right? Okay, see here. So their profit sharing ratio is 4:3:2. On 1st of April 2012, John gave a notice to retire from the firm. Nandan and Rosa decided to share the future profits in the ratio of 1:1. Okay. The capital account balance of Nandan and Rosa after all adjustments showed a balance of 43,000 and 80,500. So 43,000 rupees plus 80,500 rupees, sir, plus the retiring partner's balance that we have to pay. Total amount to be paid in John was rupees 95,500. 95,500. So what is the total adjusted capital before retirement? Tell me. Total of all these three. You can unmute Sadhana Shivarish. 43,000 plus 80,500 plus 95,500. 2,19,000, right, Shivarish? 2,19,000 is your total adjusted capital, right? Now, so step number 2, you have to calculate, or you have to distribute now. Distribute adjusted capital between who are the continuing partners? Nandan and John, no? Sorry, Nandan and Rosa. Nandan and Rosa as per new profit sharing ratio. And new profit sharing ratio is 1:1. So after distributing that, what will be the amount of capital? And that is your closing capital, 1,09,500. So I'm writing here now. I'm just preparing one table. After distributing this, you got the answer 1,09,500 rupees, right? Then each, I can say, page. Okay. Then, so step number third. So simply I need to write down existing adjusted capital of Nandan and Rosa. What is the existing adjusted capital of Nandan and Rosa? 43,000 and 80,500. I'm writing 43,000 and 80,500, right? 43,000 and 80,500 rupees. It was given in the question. It is given in the question. Then I need to write down, so the capital that I've calculated just now, that is their actual closing capital, right? So closing capital, the closing capital is 1,09,500, 1,09,500 rupees, right? So this will be their final answer, 1,09,500 to 1,09,500. So both are in shortage, right? Both needs to provide amount to the firm. Simply I need to see the difference between these two. At present they are having 43,000. They have given 43,000 to firm, but they're supposed to give total 1,09,500. So what is difference? 66,500 rupees the difference that they provide. They need to provide to the firm. Here, Rosa needs to provide 29,000 to the firm, right? And if you add these 66,500 plus 29,000, what is the total of these two? Is it matching with 95,500? Yes. So it is matching with 95,500, which is payable to what is the name of the partner? John. Which is payable to John. So you can pass separate journal entries. So cash or bank account debit to Nandan, cash or bank account debit to Rosa, and John account debit to cash or bank, right? And this is the correct answer. Getting Sadhana, Shivari, getting both same answers. Yes, Shivari, are you there?
Sir, little bit mistake for me, sir.
Understood now?
Yes, sir.
Okay, good. I'm giving you another question. Just give me the answer. Read these, solve these, and let me know the answer. Done or not, Sadhana, Shivarish? Yes, I'm audible. Okay, yes, Shivarish. I'm sorry. XYZ are the partners in the firm. First of all, tell me which case it is. First, second, or third. Third one? Sadhana saying it's a third one, sir. Okay, we'll check. XY sharing the profits and losses in the ratio of 3:2:1. On 1st of April 2009, X detached from the firm. Y and Z agrees that the capital of the new firm shall be fixed at rupees 2,10,000 in the profit sharing ratio. The capital accounts of X, Y, and Z after all the adjustments on the date of retirement showed a balance of 1,45,000 and 63,000 respectively. Set the amount of actual cash to be brought in or paid by the partners. I guess it's not third one, it's the first one now, right? The capital is already given to you 2,10,000. Am I correct? Yes. So what I will be doing here, so who is the retiring partner here? X is retiring partners. Who are the continuing partners? Partner Y and partner Z are the continuing partners, right? So what I'm going to do here, first of all, I'm going to write down their existing adjusted capital. What is their existing adjusted capital? Their existing adjusted capital is 1,45,000 and 63,000 respectively. 1,45,000 and 63,000 rupees respectively. Then I'm going to write down their closing capital. It is given their closing capital will be 2,10,000 together, right? So that 2,10,000 rupees I need to share as per their
Profit sharing.
new profit sharing ratio. So what is their new profit sharing ratio?
2:1.
2:1. So what will be the answer? 2,10,000 in the ratio of 2:1.
1,40,000, 70,000.
1,40,000 and 70,000 rupees. So it means, sir, Y's capital, final capital has to be 1,40,000. At present, how much it is? 145?
Yes, sir.
Right. So we have to repay 5,000 to Y. We have to repay 5,000 to Y. Right. So if we are repaying, so what will be the entry? Y's capital account debit to cash or a bank account. Right. So Y's capital account we have to debit the 4 rupees 5,000. Okay. So 63 existing capital of Z is 63. But how much it has to be?
70.
It has to be a 70,000. So what we have to do?
Credit.
Yes. So we have to 70,000 has to be there. So Z needs to contribute 7,000 rupees into the business. So entry for contribution is cash or a bank account debit to Z's account. So Z account we have to credit. And we have to pass journal entry separately, right? Here we have repaid 5,000 to Y. So Y's account debit to bank account. And here he contributed 7,000 into the business. So bank account debit to Z account. Yes? For the same one, Shivari Sadhana.
Yes, sir. Get it.
Okay, good. One more question. Okay. So I'm writing one question for you. S P Q R are the partners in partnership firm. They are sharing profit and loss in the ratio of 4:3:2. Or I can say 4:3:3. 4:3:2 only. Okay. P is retiring from firm and on date of retirement adjusted capital of Q and R is rupees 1,20,000 and 1,80,000 respectively. And amount payable to P is rupees 1,50,000. You have to calculate closing capital of Q and R and necessary adjustment entry as well. Right? Got this, Sadhna? Okay. So let me know the answer. Just do this. Okay, Sadhna. See, PQR are the partners in the partnership firm. They are sharing the profits and losses in the ratio of 4:3:2. he is retiring from the firm, and on the date of retirement, adjusted capital of Q and R is 120 and 180 respectively, and amount payable to P is 1,50,000. You have to calculate closing capital of Q and R and necessary adjustment entry, right? First of all, tell me, it's case number 1, 2, or 3? Sir, in case number 1, capital is already given. In case number 3, they have given to you that continuing partner has to bring such an amount into the business, right, into the firm, and that amount must be proportionate to the their profit sharing ratio. So this is also not a third case. So it's a case number 2. So if it is a case number 2, solve. Simply I need to focus on their existing adjusted capital of Q and R. Right. So existing adjusted capital of Q and R is how much? 120 and 180, right? So 1,20,000 rupees plus 1,80,000 rupees. So total is how much, Sadhana? 3 lakh rupees. And these 3 lakh rupees we have to simply distribute. Yes, we have to simply distribute between Q and R, as per their new profit sharing ratio, right? What is their new profit sharing ratio? Three to 2, right? See, nothing is given in the question, and they are not giving me answer about the closing capital, right? So what I need to assume here, sir, the continuing partners adjusted capital, right, will be the total capital of the firm, and just we have to do what? We have to adjust that, we have to distribute that as per their profit sharing ratio. So 3 lakhs into the ratio of 3 to 2. What will be the answer? For Q it's 1,80,000 rupees, and for R it's 1,20,000 rupees, right? 1,80,000 and 1,20,000. So if you see, before adjustment, their capital were 1,20,000 for Q and 1,80,000 for R, right? And 180. Now their closing capital is 180 and 120. Exactly opposite now, reverse now, I can say. So what we have to do for Q? Sir, Q needs to bring how much? 60,000 rupees into the business. If 60,000 comes into the business, it will become 1,80,000, right? And we have to repay 60,000 to R to get his capital 1,20,000, right? And if I pass adjustment entry, what will be the entry? If I pass separate entry for Q, cash or bank account debit to Q, and here R to cash or a bank. Cash and bank account will get cancelled. So what will be the entry? R's capital account we have to debit now, Sadhana, and Q's capital account we have to credit, right, Sadhana? Yes. So that will be your final answer. Understood or not? Okay, Sadhana. So I will be stopping here. We'll stop here, right? Do revise this retirement of a chapter. If you have any question, doubt, you can ask, right?